Hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. When we take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves, what did the market tell us today, and what does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday. Also on Sunday, it's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little, and if you haven't subscribed, get over and subscribe. It's up on the right-hand corner. Just hit the button, become a subscription member. Doesn't cost you anything, doesn't do anything. All it does is push notes to you whenever I push content to it, and that keeps you up to date. As far as these markets, let's take a look at the numbers here. If we pop over, it was Fed day today. We finally get the move in terms of whatever we're going to do with respect to the Fed. And that move was mixed. Knee-jerk down. Fed did not change anything. No rate increase. They didn't do what I thought they might do. Matter of fact, I don't know if they'll ever do it anymore. I mean, the world in the land of Oz and the land of QE, it's an upside-down world, and it's like you can never raise rates again. It's a strange situation, to be quite frank about it. It's one I do not like. I don't like Fed in general, but it is what it is. You play with what's in your sandbox, and the Fed is in the sandbox, and it's a monster in the box. And today they didn't do anything, so they said, hey, we're still going to raise rates at some point, but it's not time. The economy's still great, but we don't need to raise rates. And him haul about it, and that's what happens. So you get a knee-jerk lower, push back up, make new highs, and then fall down and close lower on the day pretty much across the board. NDX and composite kind of held up. The Russell did pretty well, but on the S&P and the Dow, you gave it all up. Here on gold, $1.10 higher on the GLDs is about $11. That follows a big move yesterday. Got a viewer question on that. We'll tackle that in a bit. Bonds push higher. Short end of the curve, right? I think the IEF is the 3 to 7s. TLT also up a pretty good percentage. Dollar gets whacked. Right now, all these make sense if you think about it. If Fed's not going to raise the rates, that's going to take strength away from the dollar. So the dollar gets hit, right, down 1%. That should put a bid under the commodities. Oil, it didn't, but there you have a special situation where you have so much supply. You got the Baker Hughes, rig count tomorrow, but, I think that's a misnomer, and we could talk about that some other time. But, that one's kind of off to its own. Same thing with natural gas. You got oversupply in both of those. Silver, gold, you don't have oversupply. If anything, you're getting less and less supply, certainly on the gold side of it. Copper, you still have somewhat oversupply, but still, commodities in general could catch a bid. They do catch a bid. So bonds should go up. In other words, if you're not going to raise the interest rates, then because it's an inverse relationship, you should see bonds come down. The price of the bond go up, and the interest rates come down. That's what they did. So when I look at that picture, it looks perfectly correct, aligned with what you saw today. Now, what will be interesting is what unwinds differently. For example, just take one of these, take gold. If gold can't follow through, and if the dollar, for example, doesn't follow through to the downside, then the market's going to be sending us some sort of a message, because we should see a weaker dollar off this kind of news. And so that's the sort of thing you look for. You're looking for clues where the market's trying to tell you something. Today, in terms of the movements, these all look reasonable. Let's pop over to the charts themselves, and let's take a look at what we got here. So let's get this out of the way. S&P 500. So we'll start there. If we look at the S&P 500, now today you get the big spike up, right? But look at where it closes, back down here. Now, the bad news is it's back under this swing point high again. So you go up, you get over it, and then you close back under it. Now, you did get the break yesterday, so today is a failure, but look at your volumes. You have more volume today than you did yesterday. So that's not a 2-bar reversal. And matter of fact, it wouldn't have been even if it had less volume. But what it tells you is you pushed higher with volume, right? And that says that's a good thing, right? Anytime you push higher and you got volume going with it, that's a good thing. Now, the place that it gets a little tricky when you're trying to read this is, was that buying, the buying pressure, the increase in volume, was it a result of, well, let me say it in a different way. In commodities, you have something called open interest. And you can watch open interest to see if contracts are expanding or decreasing. So in other words, is there a greater number of buyers and sellers versus existing buyers and sellers closing out those contracts? In stocks, you don't have that, right? There is no measure of whether there was a net increase, quote unquote, net increase in contracts, because you don't really have contracts, you have stocks. The question is what happened up here? Was this sellers buying their stock back to get out of the short positions, or was it new buyers coming in buying stock? That you can't tell, and you won't be able to tell until we get more information. My gut feeling here is that more than likely it was short covering. But as you see, it didn't last very long. Now, if it's short covering, this has less value, right? The increase in volume. So that's the sort of thing you'll want to look at the next couple of days to understand whether or not this has significance or not with respect to what these markets want to do next. And so with that, I would leave that at that and say, okay, you're going to see increased volume on almost all these charts. It may be a good thing. We really won't know that for sure until we get a little bit more information that tells us how to read that increase in volume. But when you get a push up, you got volume, more than likely you're going to come back up there at some point, not too distant future, more than likely, and try to test it and see if it's real or not. And that's when you find out what that volume really was all about. Let's pop over to the let's see. So that's the main thing here on the S&P. Let's pop over to some of the others though that actually gave us additional information. I'm going to go to the NDX. Now remember, here on the NDX we were playing with the bearish retest regenerate zone. That's about where it is, and look where it traded to, right over the top of it, right? Goes over the top, so it does a quote unquote full retest. And does what? Starts to regenerate to the downside. That's the area in here that you would expect the sellers to sell. And the sellers, in fact, did sell, it appears. Increase in volume, so we still have that, so we can get another test. And we're still inside the zone. So again, mixed picture, not positive, but not wholly negative either. That's the NDX. If we go to the NASDAQ composite, the broad composite, here too we had talked about a retest regenerate zone on the NASDAQ. It's off this swing point low that was broken previously. And so when you draw that across and you look at what it looks like, right? And then you look at where price went today, what does it do? It comes right up in there, does a full retest regenerate, right? And does an immediate regenerate back to the downside. And that looks like a total rejection. If I look at volumes here and look at volumes there, we've got a little bit more volume, I believe, on the swing point low itself. 19.3. Over here we got 18.9. So you actually have a little bit more volume, and so that's a failure, a clear failure. And then, of course, if you come to the breakdown bars, you've got failures, more than failure, right, on the way down. So NASDAQ composite, broad composite, really looks like a failure. I don't know that you can read that one any other way. If we move to the Russell, right, small caps. Now the small caps typically do better in a lower interest situation, right? If the economy's good, which Yellen told us it was today, and if interest rates are low, Small companies usually do a little bit better as a result of that because they're domestic. They don't have the dollar influence, and because they've got the wind behind their sails because the economy is doing well. If we look at the Nasdaq itself, right, it's trying to get back up just like the S&P to this area, but it's been notably weaker than the Nasdaq and the NDX. What we saw today was a nice spike up on some decent volume, right? So volume expands here. You get a nice spike up. You're still over this highs that, well, actually it was this bar over here. If I actually draw it in correctly, it was from there. So you're still over this area, which is a good thing. So, all in all, Russell doesn't look too bad, but, just like the others, it sold back down today too, but left volume. So I wouldn't be surprised if somewhere over the next, even tomorrow potentially, you go back up and you test this area. And think about it, tomorrow you're going to have options expiration is quad witching, so you're going to have a lot of volume. That volume is going to show up in these charts. You probably see, the same sort of volume you saw. I'll just bring over a weekly chart. You'll probably see the same sort of volume you saw back here. This is on a weekly, but that was a quad witching back in December. So expect a lot of volume tomorrow, a lot of turnover, and if prices get back up there tomorrow and test again, you'll leave volume again. If they don't, and especially if they trade down, you'll have volume coming off those highs, which then would probably not be a good thing. So, tomorrow's going to be an important day. Most days, not every day, but a lot of days have some significance, something to look at with respect to how the markets trade. If you go to the sectors, you have the same thing. I'm not going to go through all of them, but all those that came back up to retest and regen, here's the this is the one of the stronger ones. This one actually had two. I'll use this line, I guess. This one actually had two swing point lows. Does a full retest, right? Decent volume. Compare it to the volumes here where it was coming off, right? But it has decent volume compared to these, of course. And pushes up all the way to the top. And what does it do? It gives it all up, just like everything else that we've looked at. So consumer discretionary, no different. And you really didn't see anything. The one thing I would note that also is congruent with what you would expect. Financials could not get it going today. They sold off pretty big. They are a large component inside the S&P 500. I think the S&P 500 is going to have a hard time if the financials can't move. And if the short-term rates are not going up, the banks are not going to see that come to their bottom line. That's why they sell off. So again, it makes sense. Let's pop over to the world markets. I don't want to spend too much time looking at these other than to note one or two small things, and that is that, again, going back to what happened today, if the dollar is weaker, that's, the big bad thing that was out there is if the U.S. rates start to increase, dollar gets stronger, that's going to put more pressure on emerging markets. So if we look at, like, say, Taipei, which had been doing well, Taipei had a nice night up last night. I expect Asia proper is probably going to have a little bit of a tailwind, or at least they should tonight when they trade. Here's the SSEC, which is the Shanghai Composite. Here's the Hong Kong. All of these markets should get a tailwind off this Fed action. If they don't, they're telling us something different. Let's see. Let's go to the OX markets, and we'll pick up a viewer question as well. So we'll start there. We'll start with the dollar, because the dollar really got hammered today. And the dollar's trying to make it back now into, remember we had this big spike down, but dollar's trying to make it back into the top. That's the 24.51 area, and the bar coming back is doing 2 million back into 4 million. And why am I focusing on that? Well, because that's the spike bar down, and you come down. You didn't have too much volume on this chart, which you do on some of the other charts. Now you're coming back down to test that area, and as it comes back down into that area, right, and that's about right there, that's going to be a big test. And so I want to see, if I'm bullish on the dollar, I want to see the dollar hold this area, reject price lower, and start back the other way. Now, if you expand this out and you think about, what that could do. In other words, this could be a false move in the dollar. You have an ABCD structure that was trying to form that now is all the way back down to here, right? That still could form a move back up towards these highs. So this is going to be an important area as it comes back down to try to hold the support zone into the top of that bar. That's the dollar. Now, if the dollar gets weaker, you would expect you're going to get benefit in gold. So let's take a look at gold. One of the questions tonight was about gold. Question was like what can we make of gold? Is there something really happening? I want to pull back to try to answer this question. I want to pull back some frames here and show you where gold is and what gold is doing on a larger time. This is the monthly chart. So I've got the big month up, broke a swing point low here. So what it's doing last month and this month again is it's doing an immediate retest regen off that break of that swing point low. Now, when you come back in immediately within 6 bars, you have a good chance of making it back to the top of the bar. And if we look at the top of the bar, that price point on gold is 115.96, so basically 116. So hold that number, pull over the weekly chart. And on the weekly chart, you also have, of course, breaks of swing point lows as well. And if we draw those in, the last one that broke was here, do the top of that one. And where does that one measure to? Well, it's already been tested once. That's one thing to note. So you already had one test here. Now you're coming back in to try to test again. And as it comes back, of course, a full retest would bring it to here, which is about 114. So if I check the number, I think it's about 114. Yeah, right on the dot, actually. That would be that test. And then there's also a swing point low over here, and it measures almost to the same price point. So that 114 area is the critical one to start with. If you get over the 114, then you can make it back up to that 116 number, which I believe is just about into this price zone. So that's gold on the longer term time frames. Now, if we bring it down and bring the short term time frame up and ask ourselves, is something going on here? Well, the first thing I would note is, although it's not critical yet, you're not getting a lot of volume. You're coming into what is big volume bars. More than likely that was short covering. And remember how we were talking about that earlier, is this new buyers or short covering? And the way you know that after the fact is you get a hard sell-off and you take it all right back. That's what gold did it on less volume. That tells me that most likely what really happened here was short covering. If you took the shorts out who had positioned short in this area, they're not going to be there this time. So if gold moves up this time and consistently moves up, it's new buyers. It's not short covering. The short covering is pretty much gone. It's certainly the amount of shorts that are out there are not there anymore. That's probably why you're not seeing volume expand. Now, if volume were to start to expand, right, you start to see it really expand here on the next couple of bars as it pushes higher in price, then that starts to tell you something, right? That's when you'll know. Right now, it's a little too early to know. Can this push higher? Sure it can. Can it just fold back over on itself? Absolutely. And a lot of that will depend on what the dollar does when the dollar goes into that big bar we were just looking at. So if you're looking at gold, yeah, it may do something, but from what you know right now, you don't know if it's going to or not. The only thing you do know that's good at this point is it has changed that downtrend. In other words, you had a downtrend here, and you pushed all the way back up to there, and I'm pretty sure there was a swing point low over here that got broken that this went over to make a sideways trend. Matter of fact, I can't see it from here because it's off the left-hand side of the chart now. On this one, you've actually got another swing point low. You actually had 2 of them. Both of them broke. You had one break here, and you had this one break as well, right? So those 2 swing point lows, as they broke, as you're coming back up now, you've gotten over them. And if you can hold up here just one more bar, that pretty much solidifies that and says, yes, this thing really is sideways again, right? So the bearishness goes away, at least on this time frame and at least for now. That price point on here, more or less, that swing point high here, more or less is congruent with what we saw on the weekly. And then, of course, on that monthly, it's up around 116. So the next couple bars will probably tell you what you want to know about gold. Speaking of viewer questions, there was actually another one. I want to turn to that one real quick. So this question comes from a viewer who evidently must be paying attention to what I'm saying, because he says on my weekly take, which was this past Sunday, you expressed that the markets look a little choppy and it's poised to spring significantly. And at that point, we didn't know if it's going to be up or down. We were really waiting for some more clues. And he says, what's the best thing to do in that kind of situation? So if we roll this back and look at it, we're talking about time frame wise, we're talking about might be 1, 2, 3, 4. So we were right about in this area when we were talking, and it was just getting very choppy up and down, and it wasn't. You could tell that something larger was probably going to happen, and I even said this to some of my members in the trading room, and that is that you were starting to line up some swing point lows and swing point highs, and there was another one right here that could form if we kept going sideways. As you start to line those up, what do you find? Well, you're going to find stops over those, and I believe that's exactly what happened today, which I alluded to earlier, and that's going to allow this thing to make a larger move when it moves, and and potentially carry. Now, so far this hasn't carried, and we'll talk about that in a second. But the question is what do you do? Do you put on hedge bets? Do you stay out of the market? Both bullish and bearish bets, hedge bets. If the range is large enough, this is all personal preference, and it depends on your time frame, right, to answer the question. If the range is large enough, so if you've got a range that's big, right, this was a 90-point range up here before, you can try to trade that range. There's no reason not to. As a matter of fact, if you're going to make any money, you're going to have to trade the range. But you need a larger range. Here, right, your range is pretty tight. And we were talking about this area here was probably potentially, but this was the big one on the break on the downside. In that particular case, right, when you're looking at that, your range is not that big, to begin with. When you're in here, it's just not that large. And so you don't have a way to trade both sides of the range. You really have to depend on a break, and either you fade the break, like in this case, where it comes back under and quote unquote fails. You fade the break and then you trade it back down just like you would here on some sort of a signal. And now you're trading a larger range because you need a larger range to actually trade. So if this turns out to be that range, that range is, let me draw that again. If that range turns out to be, say, here, and you actually get your short on tomorrow, if this thing actually fails and you get a short on up in this area tomorrow, you don't have to risk too much. And what are you doing? You're shooting for these lows again. And so now you have a large enough range to actually do something. And so, that question, that it really depends on your time frame, and it depends on the kind of range that you're playing in. Up here it was big enough. When you asked the question, it wasn't. Now it may be. We may actually have this larger range starting to set up, which actually takes me into the last question, and then I want to do the wrap. When you're setting up stop losses, he's asking me, do you usually use closing prices as an indicator, or just if a stock trades, do you just put a stop loss in price, stop loss price? Stop losses I talk about in my books, and what I really talk about is you want an area of significance, right? So let's just take the S&P right now. Where are your areas of significance? Well, it just proved to you today that this area right here is significant, right? Because you got over it and got back under it. So this price point right here, right, is a significant area, or it's becoming one. Unless we trade back over it and keep going tomorrow, this is probably going to be a significant area. If I wanted to put a stop, let's say I wanted to short it tomorrow and I want to put a stop on it, where would I put it? Well, because I know this is significant, I want to take this area and I want to add some sort of a cushion to it. And that cushion could be, the top of that bar that just traded over, like today's stop. So you could use this, or you could get tighter. It makes your odds less. Uh, well, your probabilities don't favor you as much if you put a tighter stop. But if this trades back down, say tomorrow into this price zone, right, somewhere down in here, right, then the stop doesn't have to be up there. It can be lower. And then you add an ATR, percentage of the ATR, the average true range, to it. I think that's in my third book. If you have that book, maybe go to chapter like 6, I think, or 7, and take a look at that. As far as the wrap, let's think about what we have here. So, you got test failures today, and you got them across almost everything. Some of them are true failures, like I think that NASDAQ is a true failure. These others, we don't quite know that yet. It looks like they're going to fail, but it's options expiration tomorrow. We could see anything, right, the day after the Fed. We could see anything happen. We may just shoot back up tomorrow. I don't think it's written in stone yet which way this thing's going to trade tomorrow. If I had to have a bias tonight, my bias would be to the downside, given the failures. I think Europe is not showing as much, and I didn't talk about Europe, but I don't think it's showing as much. Asia should try to trade higher. Assuming Europe's flat, Asia trades higher. We'll probably open up a little bit higher than we did today, tonight's close. But I think it's going to have a hard time getting up there and running, because I believe what you saw today, and tomorrow will more or less confirm it probably, is those spikes were short covering. And short covering is not something that you can build on usually. Usually it doesn't build, and in this particular case, they took it away on the same day. If we get another down day tomorrow, look for it to come back into the range and trade back down towards these bottoms. That's it for tonight. Have yourself a great one. Thanks for joining me. I'm LA. This is and was your daily NeoTA wrap. Have a great one, and I'll see you on Sunday. Good night, folks. Take care.